How to read annual report of a company. What is an annual report? The annual report is a yearly publication by the company and is sent to the shareholders and other interested parties. The annual report is published by the end of the financial year, and all the data made available in the annual report is dated to 31st March. Since the annual report is published by the company, whatever is mentioned in the annual report is assumed to be official. Hence, any misrepresentation of facts in the annual report can be held against the company. To give you a perspective, annual report contains the auditor certificates certifying the sanctity of the financial data included in the annual report. Potential investors and present shareholders are the primary audience for the annual report. Annual reports should provide the most pertinent information to an investor and should also communicate the company's primary message. For an investor, the annual report must be default option to seek information about a company. What to look for in an annual report. The annual report has many sections that contain useful information about the company. One has to be careful while going through the annual report, as there is a very thin line between the facts presented by the company and the marketing content that the company wants you to read. Let us briefly go through the various sections of an annual report and understand what the company is trying to communicate in the annual report. For the sake of the illustration, I have taken the annual report of Amara Raja Batteries Limited, belonging to financial year 2013 to 2014. As you may know, Amara Raja Batteries Limited manufacture automobile and industrial batteries. Please remember, the objective of this video is to give you a brief orientation how to read an annual report. Running through each and every page of an annual report is not practical. However, I would like to share some insights into how I would personally read through an annual report and also help you to understand what kind of information is required. For a better understanding, I would urge you to download the annual report of ARBL and go through it simultaneously as we progress through this video. ARBL's annual report contains the following 9 sections: financial highlights, the management statement, management discussion and analysis of 10-year financial highlights, corporate information, director's report, report on corporate governance, financial section and notice. We will see only few contents which are important to study fundamental analysis of a company. Financial highlights. Financial highlights contains the bird's eye view on how the financials of the company looks for the year gone by. The information in this section can be in the form of a table or graphical display of data. This section of the annual report generally does a multi-year comparison of the operating and business metrics. The details that you see in the financial highlight section are basically an extract from the company's financial statement. Along with the extracts, the company can also include a few financial ratios, which are calculated by the company itself. I briefly looked through this section to get an overall idea, but I don't like to spend too much time on it. The reason for looking at this section briefly is that I would anyway calculate this and many other ratios myself, and while I do so, I would gain greater clarity on the company and its numbers. Needless to say, over the next few videos, we will understand how to read and understand the financial statements of the company and also how to calculate the financial ratios. The next two sections, that is the management statement and management discussion and analysis, are quite important. I spent time going through these sections. Both these sections give you a sense on what the management of the company has to say about their business and the industry in general. As an investor or as a potential investor in the company, Every word mentioned in these sections is important. In fact, some of these details related to qualitative aspects, as discussed in previous video, can be found in these two sections of the annual report. In the management statement, sometimes called the chairman's message, the investor gets a perspective of how the man sitting right on top is thinking about his business. The content here is usually broad based and gives a sense on how the business is positioned. When I read through this section, I look at how realistic the management is. I am very keen to see if the company's management has its feet on the ground. I also observe if they are transparent on discussing details on what went right and what went wrong for the business. One example that I explicitly remember was reading through the chairman's message of a well established tea manufacturing company. In his message, the chairman was talking about a revenue growth of nearly 10%. However, the historical revenue numbers suggested that the company's revenue was growing at a rate of 4 to 5%. Clearly, in this context, the growth rate of 10% seemed like a celestial move. This also indicates to me that the man on the top may not really be in sync with the ground reality, and hence I decided not to invest in that company. Retrospectively, when I look back at my decision not to invest, it was probably the right decision. Here is a snapshot of Amara Raja Batteries Limited. I have highlighted a small part that I think it is interesting. I would encourage you to read through the entire message in the annual report. Moving ahead, the next section is the management discussion and analysis or MD&A. This, according to me, is perhaps one of the most important sections in the whole of annual report. The most standard way for any company to start this section is by talking about the macro trends in the economy. They discuss the overall economic activity of the country and the business sentiment across the corporate world. If the company has high exposure to exports, they even talk about global economic and business sentiment. ARBL has both exports and domestic business interest. Hence, they discuss both these angles in their AR. See the snapshot in the video. Following this, the companies usually talk about the trends in the industry and what they expect for the year ahead. This is an important section as we can understand what the company perceives as threats and opportunities in the industry. Most importantly, I read through this and also compare it with its peers to understand if the company has any advantage over its peers. For example, if Amar Raja Batteries Limited is a company of interest to me, I would read through his part of the annual report and also would read through what Exide Batteries Limited has to say in their annual report. Remember, until this point, the discussion in the management discussion and analysis is broad-based and generic. However, going forward, the company would discuss various aspects related to its business. It talks about how the business had performed across various divisions, how did it fare in comparison to the previous year, etc. The company in fact gives out specific numbers in this section. Here is a snapshot of the same. Some companies even discuss their guidelines and strategies for the year ahead across the various verticals they operate in. Do have a look at the snapshots below. After discussing these in management discussions and analysis, the annual report includes a series of other reports such as human resource report, R&D report, technology report, etc. Each of these reports are important in the context of the industry the company operates in. For example, if I am reading through a manufacturing company annual report, I would be particularly interested in the human resource report to understand if the company has any labor issues. If there are serious signs of labor issues, then it could potentially lead to the factory being shut down. which is not good for the company's shareholders. The financial statements. Finally, the last section of annual report contains the financial statement of the company. As you would agree, the financial statements are perhaps one of the most important aspects of annual report. There are three financial statements that the company will present, namely the profit and loss statement, balance sheet, and cash flow statement. We will understand each of these statements in detail over the next few videos. However, at this stage, it is important to understand that the financial statements come in two forms: standalone financial statement or simply standalone numbers, and consolidated financial statement or simply consolidated numbers. To understand the difference between standalone and consolidated numbers, we need to understand the structure of a company. Typically, a well-established company has many subsidiaries. These companies also act as a holding company for several other established companies. To help you understand this better, I have taken the example of CRISIL Limited's shareholding structure. You can find the name in CRISIL's annual report. As you may know, CRISIL is an Indian company with major focus on corporate credit trading services. As you can see in the above shareholding structure, Standard & Poor's S&P, a US-based rating agency, holds a 51% stake in CRISIL. Hence, S&P is the holding company or the promoter of CRISIL. The balance 49% shares of CRISIL is held by public and other financial institutions. However, S&P itself is 100% subsidiary of another company called the McGraw-Hill Companies. This means McGraw-Hill fully owns S&P and S&P owns 51% of CRISIL. Further, CRISIL itself fully owns another company called Irevna. Keeping the above the perspective, think about this hypothetical situation. Assume for the financial year 2014, CRISIL makes a loss of 1000 crore rupees and Irevna, its 100% subsidiary, makes a profit of rupees 700 crores. Well, this is quite simple. CRISIL on its own made a loss of rupees 1000 crore rupees, but its subsidiary Irevna made a profit of 700 crores. Hence, the overall P&L of CRISIL is 300 crores. Thanks to its subsidiary, CRISIL's loss is reduced to rupees 300 crores as opposed to massive loss of 1000 crores. Another way to look at it is CRISIL on standalone basis made a loss of rupees 1000 crores, but on a consolidated basis made a loss of 300 crores. Hence, standalone financial statements represent the standalone numbers of the company itself and do not include the financial of its subsidiaries. However, the consolidated numbers includes the company's and its subsidiaries' financial statements. I personally prefer to look through the consolidated financial statements as it gives a better representation of the company's financial position. Schedules of financial statements. When the company reports its financial statements, they usually report the full statement in the beginning and then follow it up with a detailed explanation. Have a look at the snapshot of one of ARBL's financial statement, that is balance sheet. Each particular in the financial statement is referred to as the line item. For example, the first line item in the balance sheet under equity and liability is the share capital. If you notice, there is a note number associated with share capital. These are called the schedules related to the financial statement. Looking into the above statement, ARBL states that share capital stands at 170 million rupees. As an investor, I obviously would be interested to know how ARBL arrived at 170 million rupees as their share capital. To figure this out, one needs to look into the associated schedule. Note number 2, please look at the snapshot on screen. Of course, considering you may be new to financial statements, words like share capital may not make much sense. However, the financial statements are extremely simple to understand, and over the next few videos, you will understand how to read the financial statements and make sense of it. But for now, do remember that the main financial statement gives you the summary and the associated schedules give the detail pertaining to each line item.